Hi everyone, good morning. Welcome to Pay 360 Talks. This is an event designed to provide you with insight into innovation and digital inclusion, compliance and security, customer choice, and fraud prevention, all of which we think are important topics in what is an ever increasingly digital world. So my name is Alex Common. I'm Chief Product Officer for Pay 360, and I'm going to be talking to you in this first session about the broader digital landscape, some of the challenges this presents in the public sector, and how payment innovations can help. If you join us at 11 o'clock, we're going to be joined by 3 special guests to discuss security and compliance. And then at 2 o'clock, we'll start session 3, which is going to focus on specific areas of digital, including mobile applications and open banking. So we'll have a session, we'll have an interview with Craig Tillotson from Ordo, an open banking company. So that should be really interesting. And at 3:15, we'll run session 4, and that's going to provide some insight into fraud prevention and the steps you can take to protect your organization. So that's the agenda for today. Hope you enjoy it. We hope you find the sessions valuable. It is going to be an interactive day. So throughout each of the sessions, there's going to be some polls, which we're going to ask you to participate in. If you do have any questions or comments during each of the sessions, just pop them in the chat window, and we'll try and address as many of these as possible in the Q&A section at the end of each of these sessions. Okay, so in terms of this session, what we're going to focus on is payments, innovations for social and digital inclusion. Now, I chose this topic to review the rise of digital, a trend which works for most, but trying to balance that with the delivery of public services which must work for all. So in the next 30 minutes or so, I'm going to discuss the following topics. So the rise of digital adoption during and post-COVID and why that trend's set to continue. We're going to look at some key stats in terms of payment processing, from face-to-face to online, and the rise of open banking. We're also briefly going to look at some broader trends in terms of the localization and the globalization of payments, and focus or touch upon the likes of cryptocurrency. I'm going to review all of this in context of some of the challenges faced in the public sector in terms of revenues, balancing digital with effective customer engagement for all. And throughout, we're going to pick up on some of the payment innovations which are here now and which are coming in future to assist in meeting these challenges. So let's start by looking at digital. Now, McKinsey reported in 2020 that digital adoption in Europe rose to 94%. That's an acceleration of digital growth of 3 years in just a few months. Now, that growth in hindsight is perhaps not surprising, given what we know now, multiple lockdowns, limited access to traditional businesses, and with face-to-face organisations having to convert to digital only. The digital adoption, in essence, was fundamentally enforced upon us. But now we're coming out of a COVID crisis, but there's no slowing the digital. It's fair to say we're in the makings of a digital-first economy. So why is the digital trend continuing in the absence of those enforced behaviours? Well, the pandemic initially shifted behaviours to digital because there was no other way. But that enforced adoption and then subsequent acceleration changed the emphasis to the preferred way. And that preference is based fundamentally on convenience. Digital's quick, it's now, it's 24/7, it reduces effort, it's ultimately convenient. And convenience reflects an appreciation of time, which for many of us has taken on a new resonance in the context of the pandemic. So time in itself is actually becoming an important currency, whether it's spent, whether it's saved. It's a key consideration when we engage with our customers, our citizens. A practical example of this, well, the continued rise of Amazon Prime, for example, and other such services. That's driven by you, by me, being willing to pay membership fees to shop online and pay to have goods brought to us. We're willing to pay for that convenience. We're increasingly less likely to tolerate any friction which jeopardizes it. So in this context, all organizations need to be mindful to create experiences, to use technology and use payments that respect consumer time. So payments really then a means to monetize the digital trend. They act as a force to remove consumer friction, to save time, to enable this digital first economy. So they can ease collection of revenue, do so without friction, meet that convenience agenda, drive those repeatable behaviours around a preference to engage online. And essentially, payments will be the fuel that supports these new digital business models. So, with the context of the pandemic and the acceleration of digital, I want you to just step back and review some of the public sector challenges that may arise in operating and delivering in this new world. So some of the themes I've pulled out here were actually called out by our customers. In our recent strategy workshop we ran in the Pay360 product team. Now, there's surely no one universal statement that fits everyone, but there is some commonality in some of the considerations that public sector organisations are reflecting on in their strategies moving forward. One of those key challenges will be to ensure the successful adoption of digital. So digital maturity is going to range across the UK public sector, but most will be seeking to maximise the engagement that digital can offer to customers. Customer adoption of digital is going to be driven largely by satisfaction with it, as well as, of course, by access to it. Any discontent in that digital journey may lead to lack of adoption. So that in turn may have cost implications in serving customers on non-digital channels. So the key factor here is the better the digital experience, the more convenient it is, the less friction there's going to be in the customer journey. And that's going to inevitably lead to preference in adopting that digital channel, leading to use and then reuse, and ultimately drive those end benefits to customers and organisations. So in that context, it's clear to me that payments must meet a digital inclusion agenda. So whilst I'm sure that many organisations are thinking about payment solutions for those that aren't digitally enabled, we've also got to think about the right payment solutions for those that are on board to digital. We've got to give customers the right choices to pay. That's going to encourage continued adoption and reuse. So we'll take a look a bit later on at some of the most common methods of paying online. But I think the key point I want to reiterate here is if we don't have effective payment solutions, we don't have effective digital solutions. Now, digital isn't, of course, just about delivering online services for customers. There's also the challenge of providing staff with the right digital solutions to support new ways of working. So with a home working, distributed contact centres, there's a need for new technologies which can drive operational efficiencies whilst maximising customer engagement. And obviously that can be a really important factor in delivery of public service when we consider a possible reduction in physical customer contact points. Compliance factors may come into play, be they processing card or other sensitive data, and technology needs to deliver the balance between compliance, changing operational practice, and great customer engagement. Payment solutions can help an organisation innovate here. Balancing the books, a key consideration in a time where revenues have been under pressure as a direct impact of the pandemic. With revenue challenges comes consideration of effective income collection and potentially commercialisation. And we'll look at solutions in both of these areas a bit later. So as a result of the pandemic, many organisations have also seen an increase in debt management, debt recovery activities. And that's a challenging area, of course, given the wider economic position for many customers. Payment solutions have evolved considerably in this area, offering insight and genuinely affordable, sustainable payment plans and collections, delivering on social responsibility. Payouts continue to be challenging for many organisations, be that emergency, welfare, hardship or grants. And often payouts are operationally inefficient. They can be slow, they can be costly, but there are payment solutions which can simplify that delivery, protect your organisation, get the funds as quickly as possible to your customers at minimum cost. So they were some of the challenges facing public sector organisations as raised by our customers to us. And we're going to review each of those as we kind of move through the rest of this presentation and look at some of the payment trends prevalent in the industry today and see how payment innovations can assist. So as we look back at 2020, the first thing to observe is that total payment volumes actually fell by 11% as a result of the pandemic. But within that reduced volume, there were significant changes in the makeup of payments, and they're going to continue in future. So the diagram you can see on screen in front of you is from UK Finance, and that shows all payments across the UK from and to individuals and businesses. And some of the key broad trends to call out are that cards are by some margin the most significant form of payment in the UK by volume. Actually, they account for about 52% of all payments. 85% of those are by debit card. And that behaviour is driven by longer term trends in terms of the availability of debit cards, and by shorter term trends in terms of the increasing volume of online commerce and the rise of contactless culture. Cash, still the second most popular means of payment by volume, that fell significantly in 2020 and in many ways is being supplanted by contactless card payments. Faster payments and remote banking, well, that's set to become the most popular means of business-to-business payments in 2021. And for me, that underlies the value these payments can bring to consumers too, as open banking adoption increases. Businesses are enjoying the benefits of real-time, auditable, trackable payments. Unfortunately, another key trend in 2020 was the prevalence of fraud, and that accounted for nearly £1.3 billion. 45% of that was card payment related and 38% related to authorised push payments. In 2020, there were more opportunities and more sophistication in fraudster activity. So it remains key for all organisations, indeed in the public sector, to be mindful of the prevalence of fraud and to take steps to mitigate and prevent costly losses. So what we're going to do now is take a closer look at some of the data behind face-to-face payments. But before we do, I'm going to kick this off by asking everyone listening to share how you make payments at a point of sale. So hopefully on screen you can see a poll now. So if you can turn to the screen, because we've got a question for you. And that question is, how do you prefer to pay for goods and services in a physical shop? So you can see your choices there. Do you prefer to pay by cash, by contactless plastic debit or credit card, i.e. taking your card out of your wallet, touching it on screen? Or do you actually prefer to pay via digital wallet you perhaps got stored on your smartphone? Apple Pay, Google Pay, Samsung Pay. So you're basically tapping your mobile phone. Got about 20 more seconds to select your answer. Again, there's nothing right or wrong here. It's a question of preference. How do you prefer to pay in a physical shop? By cash, taking your card out, touching it contactlessly, or using your smartphone to pay? So I think the results are going to come up in 1 minute. Right. Wow. That's a fascinating poll result. So we have 2% of people prefer to pay by cash, 71% by contactless plastic debit or credit card, and 27% by contactless digital wallet on a smartphone. Right, that's fascinating, and I think a very fair reflection actually of the wider UK population. So we'll have a look now at my next slide and see how that stacks up. Thank you for taking part in that. The broad trend in the UK is that cash is being supplanted by contactless payments. So cash has declined from 56% of all payments in 2010 to 17% just a decade later, and actually continues to fall by over 15% per year. That's just a huge cultural shift in the UK. The number of people who mainly use cash has dropped dramatically too, especially in the last 5 years, whilst 22.4 million of us use cash less than fortnightly. On the contactless side of things, we saw 12% growth in 2020, and actually 1 in 4 of all payments made in the UK now are made by contactless methods. On the smartphone front, 17.3 million people are now registered for mobile payments, Apple, Google, Samsung. That's an increase of 7 million just from 2019. So it is fair to say, and the poll kind of reflects it, that the day of smartphone as a payment wallet is truly here. So let's reflect on this a little more. Cash continues to decline, but it does still remain the second most popular payment method in the UK, albeit significantly behind cards. 98% of adults have the means of making a debit card payment. And UK Finance note that Most of those that use cash by preference are still comfortable and happy to make payments by other methods. Collecting income face-to-face can be expensive, but then local hubs can form important parts of the community for social inclusion. So there's much to consider outside of pure payment methods. A cash or a face-to-face provision is very much a local decision, and we're aware that some organisations are choosing to reduce or even remove this, preferring to adopt a network outlet route only, such as post office and PayPoint. So Pay360, from our point of view, we're happy to offer our customers PayPoint, post office, and post office's new offering, PayZone, that allows you to pay in the likes of Tesco Express, as well as a combined 24,000 outlets. When it comes to the rise of contactless payments, you can of course choose tethered devices on your network or mobile point of sale devices which use GPRS. Again, Pay360 can offer both of those to you. Both of those are integrated into your line of business systems. Mobile point of sale can really simplify those moments in the field, queue busting, on doorsteps, at events, perhaps in one-stop shops where you want to offer the ability to pay. As we look at the future and what's happening in this space, the payments industry is actually developing innovations in software-driven point of sale, eventually replacing designated hardware with accredited software you can download onto your device and securely process both contactless and chip and PIN payments. But that technology is incredibly new, incredibly immature, especially in the UK. Obviously, we'll be seeking to offer it to customers as solutions become more refined and developed. In the meantime, do consider integrated mobile point of sale devices. Finally, to kind of wrap up this piece around face-to-face payments, there was a recent survey from Samsung, and that suggested that 53% of all respondents would be happy to no longer receive plastic cards from their banks. So it's a really interesting space. So we're going to move on now and take a look at the area of online commerce and see what happened last year. So in 2020, the UK payments internet market totaled £308 billion on 4.1 billion payments. 91% of us bought goods or services online in 2020. That's 49 million plus people. 86% of us bought online at least monthly, 58% at least fortnightly. And interestingly, this includes older demographics too, with 92% of over 65s shopping online in 2020. I think a key point in the makeup of online payments is that mobile commerce dominates. So there's 74% more payments on smartphone or tablet than there are on laptop or PC. So it's clear then when we think about that, our digital journeys need to prioritize the mobile experience. And overall, we need to consider what payment methods customers prefer and use when online. Which brings me to poll number 2 of the day. So I'm going to ask everyone listening, how do you prefer to pay online? So again, if you could please turn to the screen to answer the poll. Matt's asking you, when you've paid online in the last 12 months, have you ever used a digital wallet such as Apple Pay, Google Pay or PayPal? Other digital wallets exist. No, yes once or occasionally, or yes frequently. So if you could please select an answer there, and let's see again if it tallies with wider UK trends. So, got 30 more seconds to answer that. If you could for me, please. Have you used a digital wallet to pay online in the last 12 months? No, yes once or occasionally, or yes frequently. So I can still see the results coming in, and we're going to launch those in about 10 seconds time. Okay, thank you everyone for voting. Hopefully you guys can see the poll results on screen now. So 24% of you said no, you haven't used a digital wallet in the last 12 months. 29% yes, once or occasionally. 47% of you yes, frequently. Again, really interesting poll results. And I think broadly in line, but I'll show you the stats now because there's some really interesting trends going on in the UK right now. So in 2020, the most prevalent method online was digital wallets. So the likes of Apple Pay, Google Pay and PayPal, they're the primary ones. Like I say, there's others as well. So actually, mobile or digital wallets accounted for 32% of all online payments, a figure greater than using debit card. So the UK's got actually a very high adoption of these wallets when you look globally, although it's way behind China, where unbelievably 1.3 billion people are regularly using Alipay as an example. It's clear that digital wallets are here to stay. As we look ahead to 2024, it's predicted that 4 in every 10 payments made online will be made using a digital or mobile wallet. So with that kind of information, it's key that the public sector needs to ensure that its digital platforms offer those payment methods which are most prevalent. Not offering those is going to add friction to customer journeys. That may lead to dissatisfaction and even payment abandonment. If we look at a different sector, we look at the private sector retail space. One of the key industry challenges is to sufficiently remove friction so that an item we put in our shopping cart actually leads us to then making a payment for it. And the key factor governing this is whether we have the option to pay with our method of choice. Any friction in that could mean to us abandoning our cart or just not completing the payment going elsewhere. In the public sector, there is a parallel. The same considerations need to be given to drive that income collection, to drive digital adoption and customer satisfaction. So as well as what payment methods to offer, there's also the consideration of the broader optimization of the customer journey. So if your digital strategy contains development of a mobile application, perhaps you're considering a My Council or My Housing app type development, then the optimal journey will be to keep the customer within your app at all times, including app payment. Integrating with a mobile SDK will achieve this and offer the best customer experience. So Pay360 can, of course, provide this SDK to you. There's loads of other really interesting trends in the online commerce space. We've got the rise of buy now, pay later, certainly hit the headlines in the last 6 months. That's going to continue to grow in the UK. It's actually expected that 1 in 10 payments are going to be via such methods as Klarna or ClearPay by 2024. Now, given the nature of those payments, I'll leave it for you guys in public sector to determine if buy now, pay later is right for your customers. However, what I would say is that it's certainly worth noting the growing trend around splitting payments across multiple intervals, multiple months, driving take-up, driving engagement in digital platforms, and potentially commercialization. So public sector organizations could and can consider offering regular or flexible payment plans via traditional card payments. So Pay360 solutions such as planned payments, they can give you the flexibility to offer your customers what amounts can be paid over what period and to amend schedules as needed where circumstances change. So you can offer those planned payments online for self-service or set up those plans on behalf of your customers in your contact center. Planned payments are a means of capturing a growing broader trend in the UK, that of subscription payments, which despite that broader fall in spending actually rose by 9% in 2020. And that's primarily due to a growth in streaming services, Netflix, Prime, Spotify, etc. And the majority of those new services are paid for by continuous authorized card payments. And again, it's worthwhile public sector organisations reflecting on how to offer these payment plans for your services. They're commonplace now and they can drive better digital engagement. So when we take a step back and we reflect on online payments as a whole, we come back to the notion that payments are the fuel that monetizes the digital economy. Digital can't be successful without the right payment solutions, but get it right in combination and digital adoption can grow, enabling organisations to have more time to prioritise activities elsewhere around social inclusion, vulnerable people, customer engagement. I'll take a step back now and look at what else is happening in the payment industry. So in retail, cross-border transactions continue to be a really interesting space where friction is the key challenge, and the answer being to present local payment methods at checkout which are familiar to an international buyer. Now, getting these right can dramatically increase growth in new territories. And I draw the parallel here with offering customer choice and familiar, comfortable payment methods to your customers in the public sector. In the larger retail environment, you might have heard of unified commerce. It's a key drive ensuring the continuity and consistency across digital and physical to deliver a superior customer experience. And again, that's an ambition which may be useful to consider as digital maturity grows across other sectors. What about the ever newsworthy cryptocurrency? Will it be mainstream anytime soon? So there's certainly a small number of vendors out there that accept crypto as payment, and some of them allow users to spend crypto via debit card. I think the broad stance is that whilst crypto is expected to evolve and gain more mainstream acceptance, its usage is going to depend on how currencies are regulated by central banks. So the Bank of England's published its stance, as you can see on the slide here, and broadly it's fair to say that crypto at this stage, it's more of a speculative investment than a mass appeal payment method. Finally, in terms of broader trends, it's worth noting that there's different streams of centralisation and localisation of payments in different territories. So in the UK, we have the new payments architecture, and that's a design for the modernisation and future-proofing of the retail payments infrastructure. That's going to cover BACS, faster payments, image clearing or checks. On the flip side though, we've got regional payment schemes such as the European Payment Initiative, and that's creating a European payment network to rival MasterCard and Visa. In China, we've got UnionPay. In India, RuPay. So the payments market is global, but it's often disparate by territory. And you've got to reflect the trends of your customer and really understand how they interact with payments. And in the UK, the current trend is towards debit card, mobile, online wallets, contactless. And we anticipate moving forward open banking. So open banking in the UK is actually well advanced in terms of adoption. In 2020, 89% of us use one form of remote banking, with nearly 3 in 4 of us using online or mobile variants. Interestingly, adoption was across all age groups. Now, with 39 million people using the service, 60% of those use open banking to pay a bill, 50% to make other payments or transfers, and 65% to pay other individuals. Open banking as a payment method is increasingly becoming popular. I'm sure many of you may have used it online, making a charitable donation, or maybe even paying off your credit card. Its usage is becoming increasingly visible. Open banking payments are made using faster payment rails, so the majority of payments being processed between accounts in seconds. It is possible, though, to aggregate these and settle them to merchants on a daily basis to ease reconciliation and minimize costs. Now, talking about costs, the model is primarily transactional or per click, as opposed to a percentage charge typically associated with card payments. So open banking can have advantages in speed and cost to organisations. By its very nature, it's excluded from PCI DSS compliance because there's no card data captured. Now, if you've got any doubts about the security of open banking payments, you should note that there's no account information is shared with the merchant at any juncture. Open banking payments are push payments, the opposite of cards. So in card world, the customer gives their card details to a merchant, then goes to the payer's bank and they pull the money from the consumer's account. Within open banking, the consumer authorizes the payment directly in their normal banking interface, be that mobile or online. In many cases, that's done as simply as touching your fingerprint to your phone screen, providing a really seamless and convenient experience. So we've already seen how important convenience is in the digital payment journey, and open banking can absolutely provide that. Open banking can also help with customer engagement. So it can be used to collect payments in the contact center in the back office. So you can send out a digital payment request to a customer via SMS or email. And when the customer opens that link, it will allow them to make a payment immediately via their mobile banking app or online banking. No card details are captured, so there's no PCI DSS compliance, integrated into your line of business systems, and you can remain in conversation with your customer throughout the process, maximizing customer engagement. Now, those open banking solutions can complement similar solutions where you send a digital request to customers and receive payment by card. And you can blend those to maximize payment collection, minimize compliance and cost, and either way ensure great customer engagement. So I've been discussing payment services there, but open banking also includes account information services. So that's the technology that allows you to check your statement online, essentially. And this data can be used really intelligently to help your customers in the arena of hardship or debt management. So after gaining customer permission, you can gain access to incomings and outgoings on a customer bank account. And then software solutions can provide a layer of insight onto that data, and you can see really simply what an affordable or sustainable payment plan may look like. So using that insight, that technology, that can really ease debt management and recovery. It can allow your organization to demonstrate social responsibility and create an invaluable audit trail. Open banking can also provide a technology to help you with payments out to your customers, not just a means to transfer monies rapidly between bank accounts, but also to validate the payee in seconds prior to any money transfer. So a simple check that the bank account is owned by the intended recipient takes much of the operational time and cost out of the process. So open banking is a really exciting, innovative space. It can provide cost-effective, frictionless online payments, simple and compliant staff-mediated payments, insight to help with collections and debt recovery, and protection in any payouts to your customers. If you'd like to know more about Pay360's open banking solutions and our roadmap, please contact your account manager in the first instance. But if you'd like to learn more today, as I mentioned before, I'm going to be interviewing the CEO of Ordo, an open banking payments company, at 2 o'clock. So if you can, please join me there. So that brings me near to the end of the session today. Before I finish, I just wanted to recap on some of the key takeaways. So the payment space is highly diverse, but it's also highly innovative. There's trends and solutions which can help our customers overcome challenges such as revenue collection, customer engagement, and digital adoption. When we think about self-service digital, payments are a monetizing force, but they need to be implemented with the customer journey in mind, prioritizing convenience, offering the customer the choices they expect from their other digital interactions. Doing that's going to ensure satisfaction, drive the payment, and ultimately continued reuse and adoption of digital. You might want to consider payments solutions such as digital wallets, payment plans, mobile SDKs, where you're going to offer an in-app experience, and open banking too. And of course, we'll be glad as Pay360 to provide these solutions to you. Digital payment solutions are of course also needed to support new ways of working for your staff, to address cost, operational efficiency, compliance, and of course, effective customer engagement. In collecting income via telephone, there's a range of options from full telephony-based integration to compliant solutions leveraging digital payment requests to collect payments via card or open banking. Now, all of Pay360 solutions are secure, they minimize any compliance overhead, and enable you to continually engage your customer, whether inbound or outbound calls. Face-to-face engagement, again, we're seeing that decline in cash, but for our inclusive solutions, for those that prefer or need to pay in this way, PayPoint, Post Office, Payzone, for example. Contactless will continue to drive the majority of these payments in future, and dedicated mobile point-of-sale devices may be the answer for you now. There's innovative payment solutions available for debt management, and open banking can drive insight into customers' real-world ability to pay and enable the establishment of sustainable and affordable payment plans. Where you've got a need to pay out, payment solutions can protect your organization, reduce your costs, and deliver funds immediately to customers. So, in summary, payments can reach all of your customers and meet both the digital and social inclusion agendas, whilst assisting your organization in revenue collection, customer engagement, and delivery of public services. So that brings me to the end of the slides today, but we do have, I think, a little time for Q&A. Martin, have there been any questions posted during the session?
Yes, I have, Alex. Thank you for running through that. As a really interesting insight, actually, on what to expect. And one of the areas I think would be interesting to look. I mean, you mentioned, quite rightly in your challenges slide that balancing the books is going to become a really prominent activity for LAs. Not that it hasn't historically, but particularly now. We're looking at trying to just understand. There's a lot of technologies you discussed. Which of those technologies do you think best represents a decent return on investment for an LA to help them balance the books? Because clearly there's a cost associated with some of this, but what gives the best return?
Well, it's a difficult question to answer, because it's really going to depend on what's the strategy and what that local authority deems as priority. This is kind of why I themed the conversation today around there's revenue collection, but there is social inclusion with digital inclusion. How are we collecting those revenues? Leave no one behind. Inclusive solutions. So there really needs to be thought, I think, in terms of where do I get most return for my cost? And if I'm driving the majority of my customers down the digital channel, then I need to invest there, and I need to make sure those solutions are the right solutions that customers ultimately will enjoy using and reuse and continue to use as their first point of contact, and won't say, that was hard, that was complicated, I wasn't able to pay easily, and next time I'm going to make a phone call. So if you can drive the majority of folk down the digital road, then that will ultimately leave you more time to deal with those that aren't on board with digital yet or can't be on board. Interestingly, in the conversations we had with customers a couple of weeks ago in our strategy workshop, there was lots of really interesting discussion around digital coaching, reaching out to individuals who may not have digital, supporting them in getting on board with that. And I think if you get digital right for the majority of your customers, it gives you more time to address those which need to be encouraged or brought on board or assisted to be on board. So I think digital first and foremost, get that right. You probably address the majority of your demographic. That gives you more time then to focus on those where you need to spend more time. You need to ensure that ultimately your public service can be delivered. Then that leads to the interesting point around what does customer engagement look like. Hopefully I've covered some of it off today. I think I would urge everyone to have a look and have a think about open banking as an emerging technology, which has opportunities around driving better customer engagement and an opportunity to drive costs down in terms of the delivery of that mechanism as well. Again, there's so many interesting solutions out there. I won't try and repeat everything I've said here. Perhaps focus on digital as your primary method. And again, not trying to drive anyone's strategies here, but that's perhaps where everyone would like to go first as a cost-effective channel. Then you've got all of these other solutions which can encourage customer engagement, can solve those use cases which can be really difficult, around debt management, around payouts, because there are payment solutions that can do it. Hopefully that answered the question, Martin.
It certainly has. Very comprehensive. Thank you, Alex. Another question here. I mean, again, and this is a thought leadership session, so a lot of looking forward to the new emerging technologies. You looked at cash, and we can see that's in decline. Something like direct debit is probably one of the most prevalent payment methods actually in circulation within local authorities at the moment.
Yeah.
How do you see the evolution of direct debits over the next period?
Yeah, so interesting question. So direct debits account for about 7 in 10 regular payments at the moment. There's a couple of things to bear in mind here. The first is there isn't necessarily always direct debit buy-in from a younger demographic. It's not what a Gen Z, how we expect to pay, as an example. So as time moves on, direct debits doesn't always become an inclusive solution, certainly not always a digitally inclusive solution. So we need to think about that. The other thing is that direct debits has been around since the 60s. It's on an aging infrastructure, and I talked about the new payments architecture here, and that is an understanding, a reflection of we need to do something about the underlying payments infrastructure. It needs modernization. Now, open banking hasn't necessarily come about to address direct debits. There's different reasons behind it. But as we move forward, and as we look at innovations in that space, we're going to see something called variable recurring payments driven by open banking. So there's an opportunity to strip out that BACS layer, replace it with faster payments, and have far more flexibility and control with something called variable recurring payments. Now, the reason I'm going to pause here is because rather than me talk about it now, I'm speaking to Craig Tillotson at 2 o'clock today, and he's going to talk to us a bit more about some of the innovations in open banking, and I'm sure he'll talk about that there. So I think it's one of those where how long will direct debits be truly an inclusive method? How long will it be truly adopted? How long before it becomes, I don't want to use the word obsolete, but perhaps legacy? I think that it's time's coming. You know, it's probably a relatively short time window in the grand scheme of things, but there are innovations on the horizon which will replace it and actually give a better consumer and business journey.
Indeed, that should be another very interesting session to view, actually. Yeah, just a reminder to the audience: if they'd like to ask a question, please drop it into the chat, and we can ask that on your behalf. But I've got a question on, well, another sensitive area, I guess, is around sort of debt collection. I'm just wondering what you perceive as potentially being the best solution to collect debt whilst keeping it customer centric as an activity.
Yeah, obviously very sensitive, and demonstrating that social responsibility as part of public service is key. I think I touched upon using open banking data as an example, and for me that's a really interesting innovation, because perhaps rather than having a conversation with the customer, we need to set up a repayment plan. Could you afford to pay X amount? And then there's a conversation that says yes, but that turns out not to be affordable. It turns out not to be sustainable because it's based on a conversation. It's not based on data. It's not based on real world insight. So actually working with a customer to look at incomings and outgoings really simply, i.e. a software layer looking at that and saying, this person can afford to pay, for example, £10 a week, and they can, because I can see that money available in their bank account at that frequency. That demonstrates, or that will charge that affordable and that sustainable payment plan. It won't lead to that outcome where a fortnight later that customer can't afford to pay, and we're heading down a road which neither benefits the organisation nor the customer. So I think that's a really interesting technology. In terms of the cost behind it, there's all kinds of solutions available. So we have as Pay360 an automated solution to send out debt reminders and do that in an automated fashion, to use AI to look at when a customer picked that message up, so you can send a reminder via the same channel or at the same time of day. So there are automated collection suites, and then there's I guess the more focused customer-centric approach, which is when I need to speak to that customer, I need to be assured that I'm driving the outcome that they can afford to pay this, and it's a sustainable payment plan, and ultimately it leads to the outcome that's best for the customer and for my organisation. And that's where I think insight into data can really pay off. Any further questions, Martin? I'm conscious of we've probably reached 10:30, which is coming towards the end. Is there any other quick questions?
Yeah, I've just got one in, which is, what is the percentage of 65-year-olds, I think it is, that now shop online? Do you have that figure specifically?
Yeah, so it was 92% back in 2020. So that's how many over 65s during 2020 shopped online. It was 92%.
Excellent, thank you for that. A final question actually on payouts, because we do tend to focus a lot on payment acceptance, but you specifically identified payout within the slide deck. What technologies will support that feature?
Well, so there's a number of technologies in this space. So one of the I guess typical responses from the industry will be prepaid cards. One of the technologies we're looking at as something different, which we think has additional benefits, again, is open banking. So prepaid are very useful where someone hasn't got a bank account, but they can be costly and to some extent inefficient where the customer does have a bank account. It can be lengthy to try and get that card to someone, and there can be restrictions around how that customer can spend, depending on how you operate and what your policy is. So the policy of sending money straight away via open banking, if the customer has a bank account, you can make that payment immediately. And one of the key challenges, as I understand it, is, am I making the payment to the right person? Well, with something called confirmation of payee embedded in open banking, you can do a check and you can see in seconds, is the person I'm speaking to, do they own that bank account? And if they do, I can send the money instantly, and it's done. You haven't got to go over a manual process. You haven't got to do additional KYC and perhaps look at rent agreements or something else which can tie that customer to that bank account. It's all done really simply via a check done in seconds. So there are a multitude of solutions around payments out. We are looking at open banking to resolve a majority of those. We're also looking at prepaid solutions, to address the likes of asylum seekers or other use cases where you need that kind of technology. But I'd urge people to think about the likes of open banking because it's so simple and easy and can really streamline the process.
Thank you for that. So final question, so we are running a little over now. Has fraud increased as a result of people migrating to cash?
Fraud's a really interesting space. So
yeah.
online fraud has increased. I think I pointed out earlier, £1.26 billion. On the flip side, fraud mitigations have got stronger. So long as you've got those in play, then you can protect yourself more ably than you've ever been able to do so. However, if you haven't got those in play, then you can see that fraud's on the rise for online. So you've kind of got the balance. You never had stronger fraud prevention systems, you never had more sophisticated fraud. So there's definitely a real world outcome that if you can deliver on prevention, then you can obviously stop what's going on. In terms of protecting your customers, protecting your citizens, as I know many of you do in conversation, and there are vulnerable people out there who are subject to this fraud, unfortunately is the case. As I said in the slide deck, there's been a 40% increase in card payment fraud and a 38% increase in authorized push payments. So that's a customer genuinely just sending money out to someone they think who's someone else. So it can be difficult to protect those who are more susceptible or more vulnerable to fraud. So there's a whole suite of data out there. I would just urge everyone to think about making sure you've got the right fraud prevention tools in place.
Okay, thank you. That's all the questions, Alex. Thank you for answering those.
Okay, no problem. And thank you everyone for asking the questions and taking the time out to listen broadly today. If you have got any further questions, comments or feedback, please do get in touch with us, via the usual channels. We'll be glad to pick up a conversation with you, discuss further. For now, I think that brings us to the end of the session. Hopefully we'll see you on session 2, 3 and 4 throughout today. So many thanks for now and bye for now.